We're getting an object lesson right now about why it's important to think of sectors as being individual stocks and then to drill down to figure out ways in which they're actually different. We're getting this lesson from the fertilizer industry, particularly if you just sort of divide the industry in half, the half of that the industry that's about mining potash and the half of it that's about producing fertilizer from natural gas. We got a pretty good report the other day being November 6th, from CF Industries, symbol CF. They're a company that does most of its fertilizer production in the part of the industry that produces fertilizer from natural gas. And what they're saying is natural gas prices are really, really low. Demand is pretty good. There's not a whole lot of new capacity coming online. And the fact that the corn harvest was early this year means the fields are clear and that farmers are going to start applying fertilizer earlier this year. This was all good news from CF. The next day, we got negative news or mixed news from Agrium, symbol AGU. Now, this is a company that has interests all across the sector, including in the store sector. They actually have stores that sell fertilizer and seed and other crop things such as pesticides and herbicides. And what they said is that in their broad span of business, they're seeing the same thing that CF is seeing in its part of the business, good demand and stuff that's made out of good demand and falling prices and stuff that's made out of natural gas. But in their mining part, in the potash part, they're seeing a lot of extra capacity, they're seeing prices weak, etc. And what happened after they did that is the stock sold off. The interesting thing, and the thing that you'd want to look at, is that, well, because people look at this as a sector and because a lot of money in the sector is invested through ETFs that basically just look at agricultural sector as a whole, CF sold down at the same time as Agrium, despite the fact that they're talking about very different parts of a single sector. So if you look at that and you understand the sector, you can say, okay, maybe I want to buy CF on good news because I'm getting the good news at a cheap price because of the mixed news from Agrium. I would say actually you probably want to buy both of these companies and you just want to avoid things like concentrated potash producers like Potash of Saskatchewan. POT is the symbol there. So again, if you break apart the sector, a sector that you like, and I like sort of fertilizer for the long haul because of the increase in the need for global food production and the rising incomes in farmers producing the ability to buy more fertilizer so they can increase their yields. All those are long-term trends. In the short term, however, break apart the sector, any sector, and see what companies are giving you good news because of the way they're structured and the part of the market they operate in. And sometimes, as in this case, I think you can get things like CF and maybe even Agrium at a temporary bargain. This is Jim Jubak for Jubak Asset Management Video.